Welcome, everyone, to another exciting episode of the None of Our Businesses YouTube show and podcast. I'm excited today to have with me the OG crew. We've got AJ Wheeler.
How's it going?
And Charlie Ziegman.
Thanks for joining, everybody.
Well, the three of us are back together again, and I'm Ty. The three of us are back together again, and we're talking about some latest current events. Before we do that, though, I just want to make a special announcement, a special request. Hey, if you've been watching this and you enjoy it, hit that subscribe button, tell your friends about it. Whether it's on YouTube, hit the subscribe button or subscribe to us in your favorite podcast outlet. Being a subscriber, giving us likes, giving us comments, engaging with us, that stuff all helps this get distributed to a wider audience, which is definitely a goal for us. We'd love to grow our channels and grow our reach and grow our audience so that we can be engaging with more like-minded folks like all of you who are listening to us now. So without further ado, what are we going to be talking about today? Well, members of Congress are calling for open banking for the cannabis industry. Can accounting firms mandate vaccines? And even if they can, should they? Janet Yellen is promoting on behalf of the US a global minimum tax. Is that a good idea? And even if it is that a practical goal? Causal is coming after Excel, but our crew isn't buying it. And finally, dirty term sheets and hair on the deal. All right, well, let's get this rolling. Charlie, take it away.
All right, everybody. So I've got not an article we can talk about, but I've got a post, a tweet that was made by Representative Earl Blumenauer about getting banking services to cannabis businesses. And so kind of the argument going on is that they've got a bill that's being written up that's supposed to allow for there to be more banking services given to these cannabis businesses. And there's a big discussion going on in the tweet about this connection between if the IRS is able to tax a cannabis business, then it should be true that that same business should have access to all of the banking services that any other U.S. business would have. And I think it's a good point, and it seems like a given that should be true. But at the same time, it seems like those are two very different topics, and I could see how the tax agent might feel one way about it, while the bankers and the banking industry as a whole might feel another way, and they would each have kind of good reasons for feeling the way that they do. And so I kind of just want to open it up for discussion and see what you guys think. Should it be true that cannabis businesses have universal access to banking, or is that not as much of a given as you might think?
Well, I think it really kind of strikes about so I guess I was conflating the two issues. I think there's banking laws in place for one reason, and then there's kind of the tax code that is in place for another. And I don't necessarily know that they mingle too much, but I agree that cannabis businesses should have access to banking services, but it makes it weird because on a federal level, it's illegal. And so you have banking laws against money laundering and drug profits being able to be, laundered through a banking institution. But then you have the other issue where a state, it's legal at a state level, and you have a legal operating business in a state that's forced to carry large amounts of cash that puts them in danger of robbery, theft. I mean, we're all accountants. We know how tight controls need to be around cash because it can literally get up and walk off into somebody's pocket. So I think it's good that they're moving towards this system. And I think, it's a step towards federally decriminalizing or legalizing marijuana. But I kind of looked at it I kind of looked at, kind of the tax issue and the banking issue as two separate things, because I think they live kind of in two separate worlds, and the regulations around both are enacted for different reasons, I think.
Yeah, I agree with all of that. And I think that as long as we're going to accept as a society that cannabis businesses can be legal in states, which seems to be something that we've accepted, then it doesn't make any sense that we don't have the banking facilities opened up to them. So, so I say that. So I do really wish that banking regulation was free and clear to work with cannabis businesses so that it de-risks those businesses. But on the flip side, I really hate I really hate this concept that we've got going in the country for the last few decades now, where we have this idea that something will be federally illegal, but rather than making it legal, we'll just make elements of it palatable around the edges. I mean, this isn't the only place we do this with. I don't want to get into a big discussion about immigration here, but it's the same. It feels like a similar argument where we can't decide on what we're going to make legal or illegal, and so we make elements. We work on the elements around the edges of it, and it creates contradictions within our law, and it's hard to respect the law as being the law when we operate that way. So I guess I'm just very dogmatic in that way. I would much rather that we just legalize it federally, and that's what opens up the banking regulations. The idea that we have to open up the banking regulations while it stays federally illegal, so we're basically acknowledging that the federal law is ridiculous, but we keep the law on the books, which devalues the meaning of the law, right? So, I mean, I hate that answer with a passion. So I'm in favor of legalizing cannabis as a practical point, but I'm not in favor of having a conflicting set of laws working against each other across jurisdictions and across and within the federal government itself. So my vote or my answer would be just legalize it federally if you're going to be tolerating it, which you already are federally. So this game of not legalizing it is doing nothing but reducing the credibility of federal law to begin with, and is my view of all of that. And then I just mentioned I don't follow Twitter that often, and so I thought it was interesting looking at the tweet and then looking at the different responses. I didn't see a whole lot of objection to the actual concept in the tweet, but I saw a lot of hate towards the representative, just saying that he serves special interests and that and it just seemed to me, looking at the hate that was in, or the negative comments that were in Twitter against the representative for his statement, could have been and probably would have been negative comments that were posted no matter what he said. So I just thought that was an interesting dynamic, not being an avid consumer of Twitter.
Well, welcome to Twitter. That's your average, deep dive into a Twitter comment. Like, it doesn't matter what's said. People have already placed a flag on either side of the person or the issue, and they're going to let you know regardless.
Yeah, exactly. You have your enlightened discussions on Quora and save all your just person bashing for Twitter. So yeah, that's how that platform works. It's what it was built on. All right, AJ, do you have another article we can talk about?
I do. Mine comes from the Journal of Accountancy, and the tagline is, "Can accounting firms mandate vaccines?" So with the rollout of the COVID-19 vaccine and kind of everybody rushed to get in there, they proposed the question, can you make it mandatory that your employees need to get the vaccine to be able to come back to the workplace? And so they talked to a St. Louis-based CPA and a partner in charge at a large service group, and they said they're taking an educational approach. People are looking for an opportunity to get the vaccination, and the firm has done a great job of educating our team on the resources available to them. But I thought it was a bigger kind of question, when we talk about the vaccine itself, like individually. And I think, as a country, we kind of leave it up to an individual choice on whether or not you want to get vaccinated for COVID. But then you have other instances like school vaccinations or like polio vaccinations or anything like that are required if your kid's in school, and you have to get exempted from that, like a written letter or some kind of religious exemption to be able to get out of that. So I thought it was interesting to bring it into the business sphere of, can you require your employees to get a vaccination to return to work, or are they relegated to remote work without one? So I kind of like to get your guys' take on whether or not you think it's a good idea. I mean, I'm pro-vaccine. I'll lay my cards on the table here. I'm definitely not an anti-vaxxer or anything, and I think it's a good thing. And I wouldn't mind, some kind of requirement for people to have the vaccination to be in public spheres. But I realize this is America, and we don't, we're not a fascist country or anything like that. So I understand, it's probably personal choice. And if you're vaccinated, you're keeping yourself kind of out of the mix. But I'd kind of like to get your guys' take on it. Do you think it's a good idea to have these mandatory vaccinations, or do you think it's, more of a personal choice in these situations, or the legality behind, a business requiring employees to have a vaccination to come back to work?
Well, I mean, one thing that jumps out to me is I recall a story a while back on a different topic where a company had instituted a policy that if you smoked, you can't work here. And there was a lot of argument about whether or not that was a legal thing to do. And I think in that case, it all boiled down to whether or not there was a protected class in place, and smokers weren't a protected class. And so there's, laws that govern why you can fire somebody, but not everything that you might think seems controversial is a covered or protected class. And so when I go back to the question of, do I think that employers should be able to choose whether they hire people who are vaccinated? I think that is fair. I think that you set up your company to be in alignment with your values, and that might be one of your biggest values. And as long as there's not something that specifically says you cannot do that, then I think it's fair play. I think people can take that and abuse that to things that don't matter. And this is a better example of one that actually does. But I also think the personal choice element of it is interesting as well, because I mean, one of the big things in vaccinations is kind of the herd immunity of all of us getting it. And so while at the personal level, it is a personal choice, but as a community as a whole, we need everyone to be on board for it to work. So yeah, that's my take on it. What do you think, Ty?
Well, I think what's embedded in here, I think there's another discussion that's embedded in here that's not strictly about vaccines, because the way the question is asked, do we require vaccines to come back to work, presumes that going to work and going to the office are tied together, right? And I think that's kind of the other thing on here, because, everyone else is disclosed here. So I'll say my take on it is that I'm also pro-vaccine. I want to see everyone that can get one does, and I want to get mine and all that. But I also don't think that I'm also, as a business owner, wary of making it a requirement for somebody's employment. On the flip side, though, in terms of running accounting firms, some of the discussions I've been having with various accounting firms, it's very interesting, because if you think about the office situation in parallel, with or without the vaccine, accounting firms have been running, many of them for a year now, without people being in the office, and they've learned that they can run without people being in the office. And so it really raises a question, which I think is probably answered firm by firm. Some firms maybe view that getting everyone back into the office as critical to their future. Other firms, I think, and I'm more of this, because our particular firm, which is not your classic accounting firm, but our particular firm was already working mostly remote before the pandemic anyway. And so I view the office as more of a perk than an actual thing to require. It's such a different thing, right? It's like, I think a lot of these accounting firms are actually looking at it as we are requiring people to come to the office. And I'm in the opposite situation. It's like, I am looking at how I can provide an office, because everyone's tired of working by themselves in their houses, or being inundated with their children and their pets and their other family and all that, and want that actual office space. And so I see it as more of a perk. And from that context, if you're on my page and the office is something as an employer that you're providing as a perk, then I think it says even more that if it's not actually tied to employment, I feel like it's perfectly fine to say, hey, if you want this particular perk to qualify for it, unless you have some kind of exception under the law, we want you to be vaccinated. We want to be healthy around you. We want you to be healthy around us. And we don't want any extra liability for the fact that you might catch something if you're coming in to enjoy this perk with other people in our organization, kind of thing. So I don't know. I think I may be different than others on that, at least the fact that I define it so clearly as a perk. But in my discussion with some of the other CPA firms, they maybe don't define it as a perk per se, but it does feel like it. Like when I talk to other CPAs, there's some that are like, man, I cannot wait to get back to that office. I'm so excited, and so I do think that it actually is, in actuality, whether others define it that way. I think for a lot of firms, it's actually a perk to go back to the office. And I think that changes the dynamic of this conversation about whether you require or can require vaccines or not.
It's funny you say that, because in the article they mentioned incentives, like they would talk to a consultant to try and get your staff vaccinated. And one of the incentives was not coming back to the office, but it was actually like gift cards, an extra paid hour of work, gift cards, cash payments of $100 of showing proof of vaccination, but none of the perks were actually returning to the office. So I think it speaks volumes to our culture at TCA.
Yeah, I mean, it speaks volume to the opposite, right? Like if your workforce does not want to come back to work, will do whatever they can to not come back to work to the office. That's probably not a good thing, right? I mean, I think most good cultures, I think most people enjoy the flexibility, right? I mean, I think most people want the option to not have to work from the office if they don't want to. Nobody wants to be forced that they have to come into an office from 8 to 5 kind of thing. But yeah, I think, definitely. It is a cultural statement when you have some firms that people are dreading going back to the office and others where people can't wait for the opportunity to get back into the office.
Yeah. I think it's interesting that there's actually people out there that just can't wait to get back to the office. That's an interesting take. Ty, you got our next article for us?
Yeah. It's less of an article and more of just a blurb, but something I thought would be interesting for us to talk about. So this came from, I saw it on Thomson Reuters as a news announcement, but I'll just kind of read the statement. It was a statement from Janet Yellen about taxes and generally corporate taxes. And the idea is that she was promoting on behalf of the United States, she's promoting with other nations the idea that we should get to some kind of global minimum corporate tax rate. And so here's what she says about this. She says, we're working with G20 nations to agree to a global minimum corporate tax rate that can stop the race to the bottom. Together, we can use a global minimum tax to make sure the global economy thrives based on a more level playing field in the taxation of multinational corporations and spurs innovation, growth, and prosperity. It's important to work with other countries to end the pressure of tax competition and corporate tax base erosion. So, I mean, I guess me saying this in layman terms, if nations, if we were successful in coming to such an agreement, it would basically take tax arbitrage off the table in terms of how companies choose where to locate, right? And so, or at least in part, it would take part of tax arbitrage off the table. There's other pieces to tax that would still be arbitraged likely. But that being said, I guess I'll throw that out to you guys. Your thoughts on that? Whether this is something the U.S. should be engaging in terms of trying to work with other nations to take tax arbitrage off the table what do you think about that?
Well, I think it depends on kind of how you define arbitrage, because I think if you have a jurisdiction where there's a decision made to provide less services in that jurisdiction, and that leads to lower tax and companies choose to operate there in reality and are actually just operating there, then I don't think that situation necessitates a minimum tax rate, because that's an election that they're but getting what they buy. Same thing as like going to the store and buying a smaller amount of stuff. You're just getting less and you're okay with that. That's not a problem. I think when it's just strictly if it's an issue of substance over form, and so if it's just strictly that somebody's arbitraging the system to get taxes to be lower, and they're not actually operating in that way, and there's no real change in what's being provided in terms of services, then I could see the need for a global minimum tax rate, because it stops people from just offshoring income to the Cayman Islands. But my understanding was that shouldn't be happening for operational reasons anyway, for the way that those countries' tax laws are written. And so, that's kind of, I'm not sure if I've added more questions than answers there, but that's my take on it.
Well, my big question is, I think the devil's in the details here. And when you implement something like this, say for instance, your company headquarters and you're an international company, but your company headquarters or tax nexus is somewhere like that. I don't know, the tax rate's 10%, but they have a global minimum of 5 or 15%. So now they have to pay an extra 5% to meet that global minimum. Our government can't agree on anything. How are they going to come up with an agreement of where that extra 5% goes? I just don't I think the devil's really in the details on this. I agree with the concept. I think it this, shell game of moving company headquarters and nexus and, kind of playing the lowest bidding wars. And we see it happen in cities, like a couple of years ago when Amazon was going to open up a new fulfillment center, and they basically went into the press and said, who's going to give us the best deal? And you had, cities trying to rename themselves Amazon Illinois or something like that. And they essentially get these sweetheart deals where they get zero tax for the promise of jobs in that area and the economic boon of having people, then the workers being taxed to make up for the fact that, they're given $5 million in incentives and no corporate tax over 10 years or whatever it is. So I think, you can probably see on a micro level how this would work in the States, just from, U.S. companies shopping different states for different tax rates and incentives. But I think when you talk about a world stage, there's great disagreement country to country. I just see them fighting over 5% extra tax, and how that gets distributed is just an insurmountable hurdle that is very difficult to overcome. And, I think in theory it sounds good, but in practice, when you're fighting over this 5% or, this imaginary 5% tax that somebody would get, how does that happen?
Yeah, I think the goals are laudable. I agree. I think as being said in the sense that, if this agreement's among the G20, they're basically opting in to say, look, we're not going to compete with each other on the basis of tax rate. And so then what is left to compete, right? In terms of which countries are going to have the highest growth companies, which countries are going to be most attractive, nations will be most attractive to companies. They're saying, well, we're going to take away tax rate as being a variable in that competition for companies. And so what could be cool about that, right? The idealistic portion of that is, okay, if companies are not selecting where they go based on tax rates, then they're selecting it based on things, hopefully, like the environment for innovation and the education systems and other social and positive lifestyle factors that encourage nations to compete on other factors that are positive to human life besides the tax rate, right? So I'm inspired by that idea, but I have to say that I admit that AJ's point that it seems highly impractical to get that agreement. And even if you do, then that nations are backdooring some other kind of, it's like, okay, we agree on that for income tax, but we're going to provide the tax incentives through our VAT or our sales tax or our property tax or something else kind of thing, right? So I think it'd be very hard to implement in today's world.
Or even worse, they piggyback off of a low minimum wage, or, like the trickle down effect to the worker would be, the lowest common denominator of, like, now you can get the cheapest labor here, you're going to pay the same tax everywhere. We have strong infrastructure and cheap labor, so come to us, I think is something that, like a ripple effect that would happen from it that should be monitored if it even gets off the ground, and I'm hesitant to think that it even does.
Right. All right. Well, Charlie, you got a good one for us, really something coming after Excel.
Yes. So I found an article in TechCrunch, which I got a kick out of. I think it's interesting. It's called UK startup Causal, which I desperately want to call casual, but it is not casual. It is Causal. And they have raised $4.2 million to kill Excel with a number crunching app. And so what they've basically done in the article is they're talking about this new app that they're creating. It's going to be the Excel killer, according to them. And they've gone through some different reasons why that would be the case. And so they talk about how something like 80% of Excel workbooks have errors in them, and the formulas are hard to read, and sometimes you need hundreds of them. And we've fixed that by using common business terms like revenue, cost of goods sold, and profit. And so now all these different departments are going to be able to collaborate because we've sort of solved that problem. And they talk about a few other ones as well. And I've kind of heard this stance before a lot of different times over the years, because it's like when you look really in depth at anything that you do in Excel, there's almost always some kind of better product out there that will do the job better at that individual thing. And if you put up enough time or money developing that, then it will always be better. There's Python, which replaces a lot of needs for Excel. There's Tableau, which is commonly used for things that people would otherwise do in Excel. The article also talks about Google Sheets. And so kind of the idea is, we're just going to replace it. And most of it boils down to just usability for this firm. And I kind of look at it a bit more skeptical. I think that Excel has really found a way to be a lot of things to a lot of people in a lot of different industries. And some of what they define as maybe esoteric or as just unnecessary complication actually comes from trying to appeal to a large group of people with a singular product. And so I think that what they're saying is true. I think they will find things that they do better than Excel. And I think there are certain things that are good candidates for that. But I just think that anything for $4.2 million or for any number similar to replace something so ingrained in so many different industries seems like a stretch to me. And I guess I want to get your guys' take on whether or not you foresee Excel being replaced anytime soon by competitors that have better features, or what do you guys think about that?
I think the ability is there to replace it. I think you saw like Google Sheets and like even back in the day, like Open Office dig into that Microsoft Office kind of ecosystem that was, almost monopolistic at one time, that there was no alternatives. And you had like the open source, like Open Office or what's now LibreOffice kind of step in there and fill a void there. And I think Google Sheets does the same thing, but all of them are really standing on the shoulders of giants. You're talking about, essentially a copy and paste of what Excel is. In fact, the formulas look the same, the functionality and how, the layout of the program looks the same as what Microsoft Office offers. But I guess I'm kind of a little hesitant, like Excel is the Clorox or the SkillSaw or, the name brand recognition of Excel itself, and the Microsoft Office suite is so ingrained in business these days. You got to be really special, I think, to break through. And, it can have all the bells and whistles in the world, but I don't know if you're going to, have somebody reaching for Causal versus Excel unless you can make a really good case study and show them that it's easier to use, more user-friendly, and able to do the things that they're showing. And you probably have to offer it for free. I mean, you're talking about an ecosystem now. We talked about a race to the bottom for tax rates. You talk about a race to the bottom and kind of a subscription model service. Google Sheets is free. LibreOffice is free. You can use those things as a startup and not pay any money for them. Google, Excel is like the step up, and it's very inexpensive these days with 365. You're talking like, I think $50 a year or something stupid like that for access to the most up-to-date software you can get. So I'm hesitant, and I guess, I think everybody else would be too. And to be honest, 4 million seems, I would think 4 billion would seem like more money if you're going to, assert what the industry standard is for all of us. I guess I'm just really hesitant and kind of weary of competition like that. But I think competition's good, so I don't know.
Yeah, I agree with both takes on this. I go back to what Charlie was saying, and the thing that I always say, and that we can throw out some fun accounting analogies here, but flexibility is what breeds complexity. So the more flexibility you're trying to have in a system, the more complex it is going to be, period. And so all the complaints about the complexity of Excel, to me, it's just where that sits in the graph of equilibrium between being flexible and not being overly complicated. There's an equilibrium point where different people can have different judgments on how much flexibility is actually needed versus how much simplicity you want. And where you settle on that kind of creates that zone. And I think Charlie hit it right on in the sense that, these folks may think that they have a better equilibrium point on that than Excel does, but that's probably because they're ruling out a lot of use cases for Excel. And I think that also goes partly to what AJ was talking about in the sense of the best way for Causal probably to do this is to focus in some particular market or some particular segment where they know they have the right equilibrium for those use cases, rather than trying to defeat Excel across the board. Just defeat Excel in that area, because I think that is possible, that you could simplify Excel and the features in it for specific use cases where they don't need all the other bells and whistles, all the esoteric stuff, all the extras, and you can change the terminology and you can make it very specific to that area. And that's probably that's eventually what could beat Excel is enough different apps that are specific to different use case areas. It could be specific to areas of business, specific to areas of science, or it could be entire industries that have their own apps. But I think that's what we actually see with phone apps, right? There's so many different apps for any particular generic function. Like if you think about how to take notes, if you went to search for taking notes in a phone app, you would find this infinite number of different apps that essentially do the same thing. And the winners are the ones that have honed in on specific use cases and they've built an audience around their use case. And so I think that could at some point defeat Excel, is enough different apps out there that are servicing their use cases, that are servicing their audiences really well, so that everybody out there doesn't feel like they need the most generic, flexible tool of Excel to do what they need to do. But the idea that a single software is going to just come in and replace Excel by making it more simple, I don't find that very plausible at all.
Yeah, I agree completely. And I just want to say it didn't instill any confidence in me when the article listed a bunch of things that they were going to do better than Excel. And then I was able to see one at a time, all of those things are actually in Excel if you just know how to use them. And many don't. And so I admit the point is still fair, but it's just funny to see. I was hoping to see this really innovative idea of what it's going to do that's just going to crush, the other tool. And so didn't feel like I saw that. All right, AJ, do you have another article we can talk about?
I don't.
No, actually, Charlie, thanks for the article on Excel, but I want to hear more about dirty term sheets. I think you were telling me something about that. What do we have about dirty term sheets?
Sure. So I've got an article from Business Insider, and it's called "Startup Founders, VCs, and Lawyers Open Up About the Dark World of Dirty Term Sheets Where Shrewd Investors Screw Them Over." And so the idea is it focuses in on a specific example of two business owners who are entrepreneurs and they're starting their own business. And this was a real life thing. They're sitting in a cafe in New York and they're waiting for an investor to come. And the investor's on his way and he orders a dirty martini. And they know that's bad news because they know that whatever he orders matches his mood. So now he's upset and he's going to not invest in them. And so it goes through how he then sprung a bunch of basically things into the contract of how he invests that were insidiously designed to give him more control over the company than what they had understood at their little discussion. And so it gives some examples of how this happens. So one thing is it said that they would get control over who is hired and who is fired. And so that then drives who then, comes into the company. It talked about how selecting the lawyer that the company works with was another good example, because they would refer them to lawyers who had conflicts of interest due to being involved in a variety of other investment decisions relating to that same investor. It talked about a couple of other different ways that they do this, and we could go on and on. There's a million different ways that you could write a contract to do this. One of the things I thought was interesting is it mentioned that there's a lot of industry standard documents in place here. So from Y Combinator, as an example, it puts out these templates that are designed to stop these issues. And so there's kind of a lot of ways that businesses can avoid this issue. But I know that we work with a lot of different entrepreneurs, and I'm sure that we've stumbled into this kind of issue in the past. And so I want to get a take on, what do you have any advice for entrepreneurs who are seeking venture capital, and maybe what they can do to avoid getting signed into a contract that they don't understand? What do you think?
Well, I think my advice would be don't be cheap about it. And what I mean by that is if you're looking for this kind of investment or like as a startup, you've poured your heart and soul and a lot of your time and effort into building this business up. And this is often seen as like a windfall to have a VC or investment firm come in and invest in your company. And I think prudence in the face of seeing this is needed, and you need to bring this to counsel, your own counsel, legal counsel, accounting counsel, people that you trust to be able to vet these contracts that you're signing. I think too often people read through it and think they understand it, and find themselves on the back end not realizing that there was caveats and covenants in there that they didn't realize, and they were signing off more than they thought when they thought it was a simple investment in the company and an equity take, as opposed to installing these kind of triggers and mechanisms to allow the firm to assert more control than what you would think they would have in a minor ownership role or even a majority ownership role. So I think prudence is always and I think you're almost to the finish line of having to either somebody invest or, getting to a point where you have an investment to move the business forward to sell. You have to make sure that your back end's covered and have somebody else look at this, or multiple people look at it and vet the contract that you're signing and the equity you're giving away. Be vetted and make sure that you're not giving away more than what you thought you're giving away.
Yeah, I agree 100%. Getting the right experienced professional advice, having the right experienced professional team members. I mean, if you're out raising money, you probably are at a point where you need to have CFO experience on your team in some fashion. Maybe you're not at a point where you need a full-time CFO, but if you don't even have any kind of CFO experience on your team and you're out there raising money, that's a warning sign that you may not be prepared for that transaction unless you personally have that experience somehow. And you understand those deals on your own, because it is a lot of coordinating with lawyers and accountants and other advisors when you go through one of those deals. But I would back up a step and say that even talking about, getting the right advice and getting the experience to structure the deals appropriately presumes that you have a clear understanding as the entrepreneur operator of what your own motivations are and what you're trying to do. And what I often find is that sometimes is a little bit questionable as people are entering these deals, because there's different reasons why you could be raising money, right? You could be raising money because you want to bring money into you're a startup, you're trying to bring money into this in order to grow the company. But you intend to run it yourself. I mean, you still want it to be your company for all intents and purposes. You want the money that comes in to be an investor. There are scenarios where you've been running the company and the money you bring in, you essentially want them to take control because this is your retirement plan. This is part of your exit option. So you want, maybe you're agreeable to stay on for a little while, but it's actually your intent to maybe help hire somebody else, and then you'll back out, and maybe you'll have an interest in this, but you're not really going to be in charge, and you're actually okay with giving up some of the control to the investor or to a next group of people at that point. It could be some combination of that where you're trying to take money off the table. You've grown the business to a certain size and you are in fact trying to take money off the table. And I would suggest that if you're trying to personally take money off the table, in other words, trying to cash out, but then keep the business going after that, you're going to be giving up some amount of control. That's just going to be part of the deal, right? And so if you're just wanting cash to grow the business, you're not trying to take money off the table, then it is more reasonable that you could obtain the right kind of investment with the right structured deals that allows you to continue to be in proper control of the business without giving away too much control to the investors. And then I guess the next phase of that, I would say, is understanding what it is you actually want and what your motivations are and how much you're actually trying to raise. So understanding what you want, what your motivations are, how much you're trying to raise and why, and how you're going to put that money to use. That's all. When I talk about having kind of CFO level advice on your team, that's what that's for. Because a lot of times those issues are unclear. And if you're not clear on those issues, you're basically turning over the reins to the investor to basically clarify those issues the way they want to clarify them with the way they structure the deal, right? And so, and you end up in a space that you never thought you would be in, but let's be fair, you didn't actually know what you were aiming for in the first place, because you didn't think through all those things, and probably because you didn't have the right advice at the table to begin with. And so the next piece of that I would point out is that once you do know what exactly you're looking for, then realizing that there's different kinds of investors out there, and the categories are rough, there's crossovers between them, but your classic VC investor, if they're a classic venture capital and they're doing kind of what you would expect venture capital to do, is you're expecting them to be placing a bet, more or less. They're gonna invest in you because they have faith in you, they have faith in the business, but a truly properly structured VC firm is not in the business of running your business. That's not what they do. They have a portfolio of multiple businesses in which they invest, and to them, they're making multiple placements. They know many of them will not work out, but some of them will, and that's how they make their money. And so they're in the business of making the best bets they can, betting on the best horses, the best entrepreneurs, the best jockeys, the best companies. That's how they operate. That's different than private equity. Private equity is in the business of owning you and telling you what to do. They come in with money with the intent on running your business. They have professional operators and managers, and they may recommend, they'll have a lot of recommendations for you, and they will be very active in the operation of your business if they're more on the private equity side of it, typically. And so thinking about those two different kinds of investors, both could be good, depending on what you want, what you're looking for. And like I said, I'm painting with a broad brush these categories. You may find investors or firms that are not exactly in either of those two categories, but I think it's helpful to keep those two categories in mind, know what you're aiming for, and knowing who you're talking to. Am I talking to somebody who's placing me in their portfolio as one of many bets? They'll be there with some advice. They certainly want to make their money back plus a return, and they're gonna want to hear how we're getting there, but they're not in the business of running my company. Is that who I'm dealing with? Or am I dealing with somebody who is in the business of deploying operational efficiencies across many portfolio companies, and they have professional management across companies, and they are in the business of trying to gain synergy by getting deeply involved in all of their portfolio businesses? That's a different kind of investor, a different kind of model. Knowing which one you're talking to is super important.
I agree with that completely, and that makes a lot of sense. I just want to add and say that remember that as they're taking in these new investments, they're trying to change. And so even if they think that they know their business and they know what's good for their business, they're growing because they're bringing in venture capital. And so because of the fact that things are changing, even what might make sense as a term to put in a agreement when your company is some certain size might stop making sense as you expand to maybe 5 times size because you've now brought in all this capital. And so thinking outside the box from not just where your company is today, but where it might be as a result of this deal, and then analyzing the terms in that scope, I think is also helpful in a step that I could imagine getting overlooked. Because it's like, for example, in the article, it talks about the right to veto people who you might fire. Well, when you've got a small team of 5 people, that might not matter. You don't think you're going to fire those people. And then as you grow to a team of 100, due to the influx of venture capital, suddenly that thing which didn't matter before now is a really big decision and gives all this extra control. And so, yeah, but just a million examples like that. But yeah, I thought it was an interesting article. And yeah, I think that's what we've got for the podcast today. All right, everybody. Thanks for watching. Thanks for listening. That's been our show. This has been the None of Our Businesses YouTube show and podcast, where we look at all business issues from an accountant's perspective. If you enjoyed it, please check out our sister podcast, Profitless on Purpose, where they take a look at all issues pertaining to the nonprofit space. Thanks for watching. Thanks for listening. And please tune back in again next week. Bye, everybody.
Thanks, everyone.
Bye, everyone.